Alright, so here's what we're going to be looking at right now. First, of course, we have the Dow Jones Industrial Average. I have the chart here, and I want to first look at momentum, and I want to look for divergence signals. Now, if I am here in a 60-minute chart, which this is what I like to use, especially in this recent trading range, we've noticed that pretty much every single time the market has made a top or bottom, there's been some kind of divergence signal first, besides here and here, where they're essentially just V tops and V bottoms. But anyway, the thing that I want to show you is that if I drew these overbought and oversold zones right here by the green is overbought, red is oversold, and this morning actually we spiked up into this overbought territory where that's where we made our ultimate high and we soon reversed. So we did that and now we are going back down. So it's at first we can just say, okay, it's an overbought reaction. We can't really say that's going to be a trend reversal yet. We can just say it's an overbought reaction. But to get a better idea of what's going on, let's actually put on the RSI. So RSI Wilder, 14 period right here, and let's actually move this into a 2-hour chart. So what we've seen here is that since this high, and actually I'm going to use the S&P so we can get a more clear view. So if I bring up the S&P 500, it should be pretty much the same, yeah. So what we see here is that if this is an ultimate top, which I did say in my newsletter that it would be a pivot day today or tomorrow, if this was an ultimate top here, then that's going to actually give us a pretty darn conclusive negative divergence right here. So momentum is still stalling. So what we have is this would be a negative divergence, that would be the top, and as long as it stays under this line, the divergence wouldn't be canceled out. If it gets above this green line, then oh yeah, S&P is definitely going up to like 1410, 1415 at least. The Dow Jones is going to go up to 13,300 at least. But until then, it's just hanging out under this line. So that's the second thing I wanted to look at. Third thing I want to look at was the actual price movement of today. So I'm going to use the ETFs here because they don't let indexes gap. So if I go in here and I jump into, let's just go with a 1-month chart here, notice these things that I circled right here. So we actually had the same exact price movement today, which I'll change this color. This is today, the pink circle. We had the same exact price movement pretty much, or this price behavior pretty much at the last 2 highs. So this actual pattern right here is called a gravestone. So the idea is we open at a certain price and we go up and then we go back down and we finish right around the open. It's very pronounced on the Dow. So you see right here. So if you think about it, like if you're a traditional analyst, you say, oh, market's making new highs, everything's great. If you're a candlestick analyst, which this is what I'm doing, this is Japanese methodologies right here, you would say, wow, what a momentum reversal today. We opened at a price and we had great momentum in the afternoon, and then it suddenly reversed down. And to boot that, on this low volume, it might be some trouble around the corner. But the thing is, still nothing's confirmed because, well, the Russell was outperforming big time. The NASDAQ was outperforming big time. Like, it was almost as if money was flowing into risk today. But in the major indices, the large cap ones, the Dow and the S&P, seems just a strange distribution start happening in the last 30 minutes of trading. So that's what I'm looking at right now. Still, the actual target on the Dow Jones, which this was my preliminary target, and you don't see it here, but my preliminary target was 13,173, and the high today was about 13,187. So if we can break above today's high, then yeah, we're going all the way 13,300. But for now, movement, candlestick analysis, we better get some good news out there, or a nice opening gap tomorrow. All right, thanks for watching.